So, on April 8th, the market was on fire, celebrating some good news with a huge rally. A US-Iran ceasefire and falling oil prices had optimism soaring. But then, everything changed overnight. The very next day, the Sensex plunged over 900 points, completely wiping out all those gains. So what exactly went wrong? Well, it wasn't just one thing, but a mix of connected problems. First off, that optimism around the ceasefire just evaporated. The situation turned fragile really fast. Renewed tensions and a key oil route closure sent shockwaves right through global energy markets. And for a country like India, which imports so much oil, this is a huge economic risk. But geopolitics was only part of it. The market was already showing some real weakness. So while US markets were surging, you can see Indian indices were telling a totally different story. This signals that the market was already fragile, and a big reason for that was who was selling. When these major foreign investors sell off day after day, it puts huge pressure on the market. In fact, they had been selling for 23 straight sessions. That's a serious sign of caution. And you can see this reflected in the sectors. Widespread declines, with only metals showing any strength. And these shocks went beyond the stock market. They actually rippled out into the broader economy. Yeah, the Indian rupee's 5-day rally came to a screeching halt, a real double whammy. And this starts a chain reaction. See, higher oil prices directly threaten the government's budget math. This means more spending on subsidies and collecting less in taxes, risking a bigger fiscal deficit. So it's not just about the news. The market's own weakness made it totally vulnerable. This is a great lesson. You have to look beyond the headlines to really understand the market.